What's up, everybody? Welcome to the High Performance YouTube Trading Channel. Okay, I am your host, Joshua Salvetti, and today I have an important lesson, right, on my trading strategy that has changed my life, right? I've been trading for 4 years. I've traded pretty much every single way that you can, and none compare to trading supply and demand zones, right? Supply and demand has absolutely changed the game for me. It has simplified the market like no other, right? I remember in the beginning years of being a trader, I used to depend on things like the RSI, right? The MACD, tons of lines and technical analysis. And where that gets tricky and confusing is you are relying on so many different indicators to help you understand price action, right? The RSI, when it gets to overbought, right, you're expecting the market to sell off, but in reality, in uptrends, it continues to be overbought, right? So the difference between supply and demand and other strategies is the simplicity, right? So supply and demand, what we're going to break down here is just basic organic price and volume analysis, right? That really helps us change the game and notice different strengths and weaknesses that the market has, right? So before we go any further, I just want to recommend my Instagram, right? I have an Instagram at High Performance Trader. I offer tons of trading tips, tricks, right? Pre-market analysis, bunch of motivational, inspirational stuff, right? I truly believe in providing resources for the community, talking about trades, chart patterns, and stuff that I use day in and day out to make money, right? So without further ado, let's break right into it. How to draw and recognize supply and demand zones. Okay, so first of all, what are they? So what is a supply? What is a demand zone? Well, first things first, they are key levels of interest we look to capture profitable trades, right? And another way of saying that is capturing market imbalances, right? But most of all, what I want you guys to take from this is our edge whenever we're ready to put on a trade, whether you trade futures, options, whether you buy shares. Supply and demand gives you your entry points and your exit points, right? So they are key levels of interest. You're going to hear me say that a lot, areas of value, and that's what I'm talking about, right? They are areas with a high probability of a chart pattern or a reversal, right? So in these areas comes a lot of volume, right? These are real volatile areas. These are areas where buyers and sellers are battling over price and over strength, right? So these are the areas we look to validate chart patterns. So when we validate the chart pattern, we're able to enter the trade, right? These are areas we look to see who's going to take control of the market. So first of all, demand, right? So, and the way I want to break this down for everybody, right? Because I traded for a while and didn't understand this, and it hurt me as a trader. So for everybody out there watching this, I need you to look at these areas as a market auction. I need you to look at every chart as a market auction, right? And what that means is there is a constant war between buyers and sellers, right? So as there becomes more buyers, the demand for shares increases, right? And as the demand for shares increase, the price goes up, right? And it's the exact opposite for supply. So when there's a high volume of sellers, right, the supply for the shares increase and then the price goes down, right? So that right there is the only thing that makes the market move. Whether it's panic, whether it's long-term investment, whatever it is, banks and institutions are constantly buying and selling these shares. And that's where we get these huge rips, right? And these huge moves. So these are areas, demand, that have large buyers and they're defending their price here. So right here on QQQ over here at price 280, we have a continuation, right? Where every time price comes down and touches 280, it bounces. So when I say bounce, what I really mean is every time price comes down to 280, tons of buyers step up, right? And then it comes up and sellers try to take it back down. And then 280 hits, bam, it goes right back up. And then it makes a little higher high right here, right? So the first bounce brought us to around 290. The second bounce brought us to around 293. So then it comes down and retouches demand and then rips huge up to 295. See how buyers are getting stronger here, right? But sellers are still matching it. And we'll get into that later. But what I'm trying to get drilled into your mind is that the demand for shares is getting higher, so the price goes higher, right? And these are areas we look to take the market long, right? So the next is supply, right? So what is supply, right? So large sellers continuing to defend a specific area, right? The exact opposite. So here on the QQQ, every time price hits 295, we get a sell-off, right? So the way I want you to look at this is right up here at 295, there's a huge bank or institution that just hits the sell button on millions of shares, but only at $295. Right, and actually it's like a zone. So if a bank or institution wants to sell tons of shares right here, the price could go up to 293, right? Like right here, it ripped all the way up to 300, but sellers still overtook it, right? So these are things you have to look for, right? I offer a huge, a full-length course on supply and demand, right? But just for the sake of this video, what you need to understand is every time price hits a specific area, in this case 295, it's met with sellers, and sellers then sell the shares, which creates a large supply, and with that the result is massive selling, price drops, right? So these are areas that we look to go short, right? So for the second part of this video, I just want to break into TOS and take a look at some live intraday examples, right? So today is January 8th 2023, and this last week we were trading in a huge range. So I just want to show you how I draw my supply and demand zones so that you can do the same as well. So first things first, we're just going to highlight this little area right here. So basically the way I want you to look at this, right, is every time, right, let me just get rid of these real quick. So every time there's a sell-off, right, how do you identify a supply zone, right? Well, first things you want to do is start off on a large time frame. So what I like to do is go on the daily, right, and then look for areas that price bounced, right? So right here at the end of this wick, we got a low here of 262.46, right? So sellers took this price down all the way to 262, and then buyers ripped it back up, right? Kind of gave us this hammer candlestick all the way up to 266. So that is a demand zone, right? Buyers were present there, right? So I like to right click, right? Let me just run you through that again. You right click, add drawing, go all the way to your rectangle, right? And then right click it again, and at properties, go to color, and then pick the darkest green that you can. Trust me, it just makes it a little easier. So now that we've identified a daily demand zone, right, then we're going to break into the 1 hour, right? You can go to the 4 hour or you can go to the 1 hour. Doesn't really matter. So this is our demand zone. And you could see here all the way back on 12/22, that day we were talking about, price came all the way down to 262 and buyers stepped in huge, right? Ripped her up like $4. So that's indicating a violent move, right? Where price sold off all day, and then buyers came in, lifted the price. So now you're looking for the next violent move down, right? And that happened at the 2 days after that over here on 12/27 in pre-market. And pre-market is extremely valuable, right? So don't worry about if it's pre-market or not. You have to identify these zones in pre-market as well. So right here, right at 270 on the dot, right? Kind of funny how that works. We get a violent sell-off, right? And what do I mean? I mean it sells off from 270 all the way back to 263, right? So what the market's telling us there is that sellers were stronger than buyers. So what does that mean? That's a supply zone right here at 270. So the way you need to look at this, right? Say this is what the market looked like, and you were waiting for your next move, right? So, and you drew your supply zone all the way out right here at 270, and as price bounced off demand, the way I'm looking at this is once price re-enters 270, I'm going to look for sellers. If I can identify that sellers enter the market, right, then I'm going to be taking it short all the way to 262. That's the strategy, right? Prior price movement, right? That's the strategy that will make you successful, right? That's the strategy that has changed my life, guys. It's called price and volume analysis, and it's based completely on price and volume in supply and demand zones, right? Areas of interest, right? I can't stress it enough, right? I am in love with this trading strategy because it's so simple, right? And any questions, guys, just contact me and let me know. I will run through them all. But let's just play this out for a little bit. So we got supply here at 270. So what my strategy, what my edge is telling me, that is price can enter 270 again, and I see some sellers, right? I see candlesticks that are selling off. I'll be taking the market short. Price rips right into 270. Look at this. Exactly here at 270. This candlestick's 269.85, right? And then bam, huge sell-off, right? We call this the double top drop, right? So for everyone on my Discord, you're probably laughing. This setup has made me so much money. It has given me so much success in this market, and I absolutely am in love with it, right? So every time price enters a supply zone here at 270, you get once, twice, hence the double top, and then drop, right? It's actually a triple top because you could see right here on this candlestick, we tried to break 270 and then rejected. I remember talking about this in the Discord. It was a phenomenal trade, right? And we called it out. So as price comes down and rejects this supply zone, right, your trade would be from 270 targeting 262, your demand. Now, why do you target 262? Well, because based on prior price performance, that's where buyers are going to come in and create demand for the stock, right? And ladies and gentlemen, buyers come in, and that's exactly what happens. And then look at, so then the next day, buyers come in, step up again, and then rip the price right back up. And then it comes back down into demand and then rips, right? And this was our day. Let me just break it down to an intraday level to show you what demand looks like intraday. So this was a phenomenal trade. We're actually going to break it down in the 1 minute, because what I love about supply and demand zones is it doesn't matter the time frame. I don't care if it's on the monthly chart, weekly chart, daily chart, 15-minute chart. Supply and demand respects all time frames. But keep in mind, okay, that supply and demand zones are stronger on higher time frames. If you're drawing a demand zone on the daily time frame, that's a pretty strong zone. If you're drawing it on the 1 minute, not as strong, but still vital, right? It still helps you identify entries and exits. And before we go any further, just look at how clean this chart looks, right? So we have a supply zone here, which is pre-market high. So every single day I look at 3 levels: pre-market high, pre-market low, and end of day, right? So we're not going to get into end of day. We're going to save that for another lesson. But basically, pre-market high, I draw a supply zone. Just like that. It's that easy. Right click, add drawing, rectangle, bam. There is your supply zone. So now don't think too much about it, right? Ready? Let me do it one more time. Grab your top of your highest candle. Right click, add drawing, rectangle. Oh, do it one more time. Right click. Hold on. Remove. Okay, so right click, add drawing, rectangle, bring it out. That's your supply zone. So now anytime price enters this zone, I'm looking to go short, right? Because based on prior price performance, that's where sellers are. That's how we identify where the banks are. That's how we enter our trades. So as this ripped up into supply, we get this candle that closes. It's called a Bayesian candle, where the wick is more than 50% of the body, which is a super bullish or bearish candlestick, depending on which side the wick's on. Price sells off right into our demand zone, right? Which was also end of day. But that would be our entry. That would be our exit. The supply and demand market imbalance. And clearly this was a suit. Now, hold on. So now we're looking for pre-market low. We're looking for our demand zone. Right click, rectangle, bam, just like that. Edit properties, pick the darkest green you got, right? Because if you go super light, ladies and gentlemen, look, I'll just show you. It's way too bright. If that's what you like, go ahead and do it. But what works for me is the darkest color possible, right? So let's just, real quick. So just like with supply, right, we're going to do the same thing with demand, right? Price comes down to 260, right? We come into this 265 area, sell off heavy, and then price comes in here, makes a double bottom, which is the exact opposite of the double top, right? Double top is once, twice, reject. Double bottom is once, twice, rip, right? And then you can see, even with all this buying volume, right, price still ripped up into 264 and it was met with sellers. Buyers still came in, but you could always expect, right, a pretty good amount of the time that sellers are going to come in at pre-market high and buyers are going to come in at pre-market low. Right, so that pretty much wraps it up for this lesson, ladies and gentlemen. Please subscribe, like for more content, right? This is the High Performance Trader. Follow me on Instagram, right, at the High Performance Trader. And also, I have a Discord. If you guys want to register, if you want to be a part of it, let me know, like, drop a comment below, right? We will get you involved because for a limited time, it is free. But prices are going to change in the near future. And if you like more content like this, like, subscribe, and I'll see you in the next video.